So, uh, we really need to talk about the London property market today. Usually when we cover housing for you on this deep dive, it is a fairly simple story.
Right. I mean, prices go up, everyone complains, but the wheel just keeps turning.
Exactly. But this time, it's acting like a schizophrenic engine. We have pulled data from The Week, This Is Money, City AM, The Telegraph, and The New Statesman.
And the consensus across all of those is genuinely strange. You've got some people quietly making a fortune, while others are facing what some of these sources are literally calling financial Armageddon.
Yeah, so our mission today is to unpack why London is suddenly leading all of England and Wales in homes sold at a loss.
And why owning a flat specifically might currently be a losing game.
The numbers on that are staggering. I was looking at the loss statistics, and if you own a flat right now, it looks pretty grim. Some sellers are taking hits of up to 34%.
Which is huge. I mean, that isn't just a market correction.
No, that's a life-altering amount of money just evaporating.
It is. Especially if you bought in the last few years expecting the usual appreciation. But here's the nuance that people often miss. It is a two-speed slump.
Right, because that 34% drop is mostly happening in
The
the...
prime expensive postcodes, yes. The market there is contracting hard.
Mm.
But if you look at the affordable
This
boroughs,
is like Havering, Waltham Forest, Lewisham,
yeah, those actually hit all-time high prices last autumn.
which is just bizarre to think about. You could be losing your shirt in Chelsea, but there are active bidding wars happening in Lewisham.
That is the reality. The demand hasn't disappeared. It has just moved down the food chain to where people can actually qualify for a mortgage.
But there's one sector where the demand seems to have evaporated entirely, which is new builds.
Oh, absolutely.
I noticed the sources were brutal on this. They claim almost nobody wants them right now.
Yeah.
Is this just about construction quality, or is it the pricing?
It is mostly the economics of the new build premium. Developers price these units based on future projections and the shiny factor.
Right, because everything is brand new.
Exactly. But the secondary market, where you sell it maybe 5 years later, well, that market prices it as a used flat.
And the gap between those two numbers is widening.
Yes. And on the supply side, construction has basically ground to a halt.
The articles mention red tape, but that always feels like a catch-all excuse. What is actually stopping the cranes from moving?
It comes down to the math. Look at Mayor Sadiq Khan's mandate on affordable housing. Now, to get planning permission fast-tracked, developers generally need to offer 35–50% of the units as affordable housing.
And just to be clear for you listening, we are just impartially reporting what the sources analyze here, not taking any political stance on the policy itself.
Of course, but strictly from a developer's spreadsheet. When you combine that margin squeeze with the higher house prices generally and the increased stamp duty costs that hit back in April 2025.
Plus the speculation surrounding the autumn budget.
Right. All of that means the developers just can't make the profit work, so they start building.
And if they stop building, supply dries up.
Which leads us directly into the political mess we are seeing now. Because supply is frozen, renters are fighting over scraps, driving rents up.
So renters are furious because they're locked out.
Yes. But simultaneously, because the prime market is falling, owners feel like the system has failed them.
So as Will Dunn identified in The New Statesman, you have two massive voting blocks, renters and owners, who are both angry at the exact same time, but for opposite reasons.
Exactly. And Dunn's analysis really delivers an aha moment regarding inflation. Because we always assume that even if the market is rocky now, if you bought 20 years ago, you are sitting on a fortune.
Which is the classic property wealth narrative.
Right, but it is actually the biggest myth in the UK economy. If you look at nominal house prices, the sticker price, they have roughly doubled since 2003.
Which sounds like a great return. You double your money.
Only if you ignore the currency. The purchasing power of the pound has roughly halved in that same period due to inflation.
Oh, wow.
So when you adjust for that, the real value of the average UK property is basically flat compared to 2003.
Wait, so the wealth generation is basically an illusion.
It is an illusion caused by inflation. You have more pounds, yes, but those pounds buy the same amount of goods as the fewer pounds you had in 2003.
The house didn't get more valuable. The money just got worth less.
Exactly. And that reality is starting to bite. Estate agents are trying to spin a recovery, noting fewer price reductions recently.
But the forecast is still pretty weak, right? Rightmove is only predicting a meager 1% rise for London next year.
Which is below inflation, meaning in real terms, prices are likely still falling.
So if the real value hasn't actually moved in 2 decades, and the premium on new builds is effectively a trap, we are left with a pretty uncomfortable question for you to ponder.
We really are.
If the real value of a home hasn't actually increased since 2003 when adjusted for inflation, should we stop viewing housing as an investment vehicle entirely and just see it as a place to live?
That is definitely something to think about before you browse Rightmove this weekend.
Thanks for joining us on this deep dive.